Here joins us, Managing Director and CEO of Nuvama Wealth. He joins us now. Let's connect with him. It's a big day for them. Nuvama Wealth is now a listed company. So Ashish, it's for any entrepreneur, for any professional, the minute you get listed, it's a big day. But I always tell people who come on those shows that then you have to be prepared for more media interviews, more scrutiny and more questions by television anchors. Is it really worth it? Think about it.
Absolutely.
Uh,
I think it's fully worth it. I think it. Can you hear me?
Yes, please.
Yeah, sorry. No, I think it's fully worth it because ultimately every business is done to realize value for shareholders, and there is no other better way to do that in a transparent way than to be a listed company. So I think one has to go through the motions of more media interviews, more analyst calls, more quarterly calls, but I think that becomes a part and parcel of life.
Indian wealth management business is going through a serious tailwind right now. Indian families are getting rich, they're investing in new instruments, but even though the big picture looks very compelling, there are disruptive forces which are at play. Commission structures are getting changed, new platforms are getting created, competition is intensifying. How do you see the big picture changing for us?
So I think big picture wise, my whole hypothesis is that if you look at the whole base of financial savings, it's in the order of magnitude about 250-300 lakh crores, and that has gotten created, bulk of it has gotten created in the last 25 years. You are going to see that increasing by 4x in the next 10 to 12 years. And penetration of wealth management, whatever we are seeing now, at least in the formal sector, is not more than 15%, whereas most of the developed economies are more than 75%. So even if we say that in the next decade or so we move from 15 to 30, you are actually seeing the absolute value of wealth being managed increase by 8x. And even then a lot will remain in informal sectors. So margin compressions can happen and all those things can happen, but the absolute value of growth is going to be high. And I think more regulations will also come, if you ask me, because the sector, if it grows to this size and scale and manages public money, needs to be regulated well so that there are no accidents. So that's how I see it. I see a long runway available for us.
High margin business, right? Wealth management?
I would not say it's a very high margin business. I think it's a moderate margin business. Any business which needs a lot of capital or regulatory licenses, that's where the high margin comes in. This business actually doesn't require a lot of capital, so it can't really be very, very high margin. But it's a business which is not very simple. It needs complex understanding of customer needs. You need to build a diversified platform which takes time and it needs a certain amount of scale to operate profitably. So it's not something which really is a very, very high margin in that sense, but it's a very high growth business, and there will be fewer players who will be able to capture high market share, so they will become extremely profitable.
Few examples here. Zerodha has disrupted the way our broking industry is moving. SEBI has changed the rates of commissions for distributors and for wealth managers. Reliance Jio is coming with a completely different platform in terms of manufacturing. There are a lot of disruptive forces which are at play. So some would say that what was high growth will remain high growth, but where the spreads were high or spreads were decent, they will get contracted. So what happens because of that?
I think it's going to evolve. There are customer sets who can be serviced through simple single product DIY platforms, but there are customers where their investable surplus and needs become complex. It's not so easy to disrupt it using only technology. If you are a single product company, I don't think there is any place now left for people to just provide access and earn high amounts of margin. And it could be any category. It could be mutual funds, it could be stocks, it could be insurance. So if you see the success wherever disruptors have had a a success story. Those are typically single product plays where customers typically know what they want, or you are narrowing the choice complexity for the customers. But when the investable surplus grows and you need to look at multiple goals, including investing, protection. Protection is both life, general, offshore investing, domestic investing, estate planning, moving of money from one generation to the other. There is room which is going to remain for specialized wealth managers forever. I don't think that's going to go away.
So what numbers we should expect from Nuvama for FY24 and beyond then?
I think I won't be able to make forward-looking statements right now. Our Q1 numbers, PAT was about 88 crores and pre-one-off expenses was about 95, and last year PAT, operating PAT was about 368, and yeah, so that's about it. Now Q2 we should come by the end of the month, end of October I mean, and that should give you the half year numbers. It's difficult to project the full year numbers right now. I don't think I'll be able to make a forward-looking statement on that.
Another question, what is the ESOP policy which you are likely to follow, because that in a sense decides the way our profits would be reported going forward?
How the ESOP policy is essentially right now the one which we have in force. It's a standard ESOP policy at a certain price vesting over a 4-5 year period. Most of the costing of that policy is already behind us because you know how ESOP is costed is typically front loaded in the first 2 years and then it keeps falling down in the rear ended years. Fresh plan we are yet to create on how much, what percentage of capital will get diluted. So we are doing a competition benchmarking right now within the listed company of our peer group, and we will formulate something very soon. But the order and the magnitude may not be similar to what we did at the time when the private equity shareholder came in.
Okay, great to have you on the show. Thank you so much and congratulations, Ashish. Once again, it's a momentous day indeed.
Thank you. Thank you for having me here and thank you for wishes.
Okay, and I can hear the cheers in the backdrop as well. Okay, quick take at the market.